to cover this morning, I'm going to start with systems, and then depending on how far we get, then I'll go through global as well, and the global settings. So the order that I typically go in, Genesis, will be the order that I would normally go in for a service bureau. So when they log into their database, they don't have all of these companies listed. This is a test database or a demo database that I gave you access to. So you should be able to access this database, and I don't think anybody else uses this database, so that you can do whatever you need to do in there. And I did set you up as an SBO admin, so you would be able to set up anything you needed to set up as far as restrictions and stuff. So when you're adding a new service bureau, so we create the database for the service bureau. And as I mentioned, there are no companies listed, so it's just a blank database. Now, some of this database does have information in it, so I'm just going to go through it. Normally, you would have the service bureau enter in the information as you go, but I think with a recording, instead of having them enter in, so if they're listening to a recording, they can enter it in as they go, but they need to be able to see some data as to what that might look like while they're trying to enter their information. So this already has information in, but they would start under systems and office and affiliates. And office and affiliates, when we add the new database, it's only going to have the main office. There won't be any secondary offices. But I'll explain the secondary offices when we're done with the main office. So with the main office, on the General Information tab, we default in the office ID and the office name, and the office name is the legal business name. Then over on the right-hand side, they fill in their main contact information. So, the first name, last name, phone numbers, fax numbers, emails, websites. The company name should be the legal business name and not a DBA, because this information pulls directly to some agency reporting, and when they're reporting to agencies, they need to report it as their legal business name and not the DBA. So, and then the address and the zip code. Anywhere you see a zip code in the system, if you type in the zip code, it will backfill the city, state, county, and country. So, in the bottom section, you have default settings. And with the default settings, these are options that as a service bureau, so as a whole, they can turn these settings off and on. So I'll just cover those. In the enable background batch printing means that, so when you go to print, when they go to print payroll packages, they select the package and they select print. And if they don't have the enable background batch printing turned on, they have to sit there and watch it print on the screen. So if they enable this background batch printing, then it will go off behind the scenes and they can move on and do other things. And if they check the box to the right, it will notify them when that printing is done, so that they don't have to waste their time while everything is printing and sitting there and watching it print.
And what does the notification look like?
The notification is just a pop-up message on the computer that says that your background batch printing has been completed.
And it'll stay there until
they have to say okay.
Okay. Got it.
Yeah, once the message pops up on the screen, they just select okay, and then it'll go away. The message will go away. So the second option, show quick notes on open company, is an obsolete option. We redesigned the way company notes works. Before, when you went into a company, it would actually pop up a window. So if I clicked on open company, immediately when I went into the company, this box would pop up with all the company notes in it, which was annoying for some people. So what we did is we made it so that the notes are on the main navigation screen of the company, but it's in the bottom and it's a fixed item on the screen, so it doesn't pop up and you don't have to close the window. You can just scroll to the bottom of the screen and see those notes listed there. So this is an obsolete option. Whether they have it checked or unchecked, is still going to display the notes at the bottom of the screen on the main company navigation screen. This third option, use office name for secure paychecks. So what secure pay means in our system is that the service provider, our service center, is going to debit the entire payroll from their payroll client, which means they're going to debit the net checks, they're going to debit the taxes, they're going to debit vendors, and they're going to pay everything out of their impound accounts. So that's called secure pay. So it means we're pulling the total payroll expense from the client, and we're putting that money into our impound account as a service provider, and then we're going to pay it on behalf of the client. When you do that, the checks that are issued for employees' paychecks or tax payments, they will all have the Service Bureau's routing and account number on them. So the checks are written off the Service Bureau's account. Now, the bank that the Service Bureau uses may want to see the Service Bureau's name on the checks. So if it's unchecked, the way the check will print out in the top left-hand corner, it will have the payroll client's name and address, and then underneath the address it will say payrolls by, in this case it would be Apex Payroll, because that's the name of our Service Bureau. But if they check the box, then it's going to say Apex Payroll with the address for Apex Payroll, and that is all determined by what the Service Bureau's bank wants to see on the checks, because the checks are from their account. Does that make sense?
Yes. So
Okay.
if it's checked, it's going to use the company name.
Mm-hmm.
If it's not checked, it's going to use the office name?
Correct. That's correct. And that is all driven. That is all driven by the Service Bureau's bank account.
So it seems backwards because it says use office name in there, but
This is the office name.
right.
So
if it's checked, it's going to use the company name on the right with that address. Okay, so I got that backwards. Okay.
No.
On the left.
So the Service Bureau, Apex Payroll, is the Service Bureau in this case.
Right.
My company would be one of my payroll companies, so someone I'm doing payroll for.
Right.
So for example, if I go to my list of companies, I'm just going to go to the cake factory. So in the cake factory, I don't have any checks, do I? There we go. So I'm going to reprint this check so you can see. So if this is a non-secure pay client, so it has the cake factory's name and address here, okay? Mm-hmm. If they are a secure pay client, and I don't have that box checked in the office, underneath here it would say payrolls by Apex Payroll. If I check the box, it's going to say Apex Payroll with Apex Payroll's address on it. Okay. Because the checks are, instead of being written off of the client's bank account, they're going to actually be written off of the Service Bureau's bank account.
Right. Okay. Gotcha.
Okay. All right. So back to Office and Affiliates and back to General. So that's what that option is for. The next option is just when we program new features and items, lots of times service bureaus will come back and say, well, no, I don't want that feature, so I need to turn it off. So then we have to program a way to turn it off. So for our client portals, like Employer on the Go, the client has access to a dashboard, and if the Service Bureau doesn't want them to have access to that dashboard, they can turn it off. But it's across all companies, and they can't just turn it off and on for individual companies.
Okay.
The next option was an added security method. Every time a new employee is added to a company, whoever the main contact person is for that company, they will receive an email letting them know that a new employee has been added and who that employee is. So if let's say I add 10 new employees to a company today, it's not going to send them 10 different emails. It's going to send them one email with all 10 of the employees in it. Okay. So this just is a different piece of security that allows payroll clients to know that, nobody's going in there and randomly adding employees because there was a Service Bureau who had an employee who would get the payroll from the client, and the client would approve it, and she would go in and add a fictitious employee with her routing and account number, and then she would close the payroll, and then she would take the employee out.
That's no good.
So, yeah, and because they had over 300 employees, it took them a while to catch it because they weren't reconciling on a regular basis. So just an additional measure of security. The fourth option, or the final option here, is to mask Social Security numbers on garnishment checks. Now, you can also turn this off at the company level on the vendor setup. You can actually mask it there, and I would probably recommend that that's where they do that at, unless they're predominantly dealing with one garnishment provider or one state agency, because not all state agencies have taken the Social Security number off of the checks yet. So, but I foresee a lot of them going to that, because then you've got somebody's personal information on a check. So, but as of right now, some state garnishment providers or agencies require that the Social Security number still be on the check. So you can turn it off here, or you can turn it off at the company level.
Okay.
The next tab is your payroll cover page. So when the Service Bureau is setting up a payroll client, they can actually add reports. They can set up reports for that payroll client, and as part of those reports, they can have what's called a payroll summary. And some of the payroll summaries, because they're all a little different, some of the payroll summaries at the top of the page have a comment section. And so the Service Bureau can put the message here that they want to have print at the top of that page. They need to make sure that they come down a couple of lines, because it actually pre-fills the period start, period end, and pay date on that payroll summary. So they want to come down a couple of lines, and then they have 250 characters that they can actually enter as part of that message. So, and that message can be anything that they want to communicate to the client. They also can put pay stub comments, and this would be across all of their clients. So typically what I will do is recommend that before they go adding pay stub comments to all of the employees for all of their payroll clients, that they have a conversation, or when they're initially bringing on the payroll client, they have a conversation that lets them know if they're going to be utilizing that as a way to market to the employees. They probably want to get approval from the payroll client before they do that.
Okay.
On the next tab, it's customization tab. So on the general tab, that was the legal business information. If they're using a DBA, this is where they would put the DBA information, and this is the information that pulls to the reports that the payroll client sees. So this is where they would fill in the DBA, contact information, phone, email. So typically for the email, I recommend like a generic email account that everyone has access to, unless they're a really small service bureau, and then they can have maybe one person in their office is responsible for maintaining and receiving all those emails. So it just depends on the size of the service bureau and what their needs are, that email address would be filled in. And then their website, and again their address.
All payroll
and contact.
reports are going to go to that email.
No, this would just be a generic piece of information. So when you set up the payroll package for the payroll client, it pulls different pieces of information for the Service Bureau onto those reports. And then also, too, if they have a website, the email address on the website would pull back from this piece of information. So again, if they're a small Service Bureau, they may only have one or two people in the office, and one person may be the receiving person for that office. But if they're a large organization, typically they have a generic email account that everybody has access to.
Okay.
On the on the left-hand side is where they would add in their logo, and they would typically just click on the add and drill down to where the logo is saved, open the logo, and then it would pull it in. The specifications for those logos are under the help files, under help, online help, and then go to the search tab and go to logos. and it will tell you the size, the types, the DPIs. So it gives you all the information for the logos and how those should be structured. So the client has access to that information. Do you see how we have Apex Payroll here as our logo, and then we have payroll underneath it?
Mm-hmm.
Sometimes as a separate piece, maybe not included in the logo, they might have a tagline underneath that. And so then that would print underneath that logo. Sometimes, though, the tagline is actually part of the logo, so it just depends on the Service Bureau and how their logo is laid out.
Okay.
The last option under there is for private labeling. So the Service Bureau can opt to have private labeling, meaning that when their clients log in to utilize the software, either via Employer on Demand or Employer on the Go, they can private label that, and rather than it saying Employer on Demand or Employer on the Go, their logo would be added to those login screens. But there are also colors, and so you can tell by looking at the color drop down here that this Service Bureau is not active for private label, because if they were active for private label, there would be a lot more colors there, like purple, pink, red, orange. And so all of those be listed out, so I can tell very easily that they haven't had private label turned on. And the color schemes, or you see the borders around the grids and stuff, those are black right now. If I change it to blue, I'd have to log out and log back in order for that to update, and it will actually tell them that you must log out and back in to see the changes in your theme sections.
Okay.
Okay. All right, on the License Info tab, this is, again, legal business information, because, again, this information is used in the reporting aspect for agencies and electronic files, EFTPS payments. So this information, this is where the information pulls from for the service provider. So their federal EIN, their legal business name. They don't have to fill this information in. It's basically informational only, but if they do have the information, they can fill it in, and it would just be contact for executive billing, purchasing, and then a billing address. And usually I don't instruct them to fill in the billing address unless it's different than the main company address. The next section is for power of attorney. So if I'm a service provider and I'm going to be filing returns and making tax payments on behalf of my payroll clients, I will need a power of attorney on file to not to make the payments, but if I need to discuss a tax issue on behalf of a client, or call and discuss a return on behalf of the client, then I need a power of attorney in order to do that, because that's going to be one of the first things the agency asks for is, do you have a power of attorney on file? So the power of attorney is usually signed by one of the owners of the company or a designated person within the company. And so that would be whoever signs the power of attorney in the office, that would be their first name, last name, and their title. And then if they want the returns to come out signed automatically, they can pull in the signature here. And then all of the agency returns, when they're batching and running those reports, would come out signed automatically.
Okay.
In the bottom section, you have miscellaneous information, and these are just add-on pieces that we've added as they occur. We need to add an additional field. This is where we typically add those additional fields. So we have 4 workers' comp providers that we partner with and that are integrated within the system. That's Hartford, Guard, Indigo, and eComp. So Guard requires that in the files that we transmit to them, that the Service Bureau have a processor ID, so that they know what Service Bureau it's coming from when the information is transmitted. And so when they sign up with Guard, Guard will assign them a processor ID. So that information would go there. And then the next field is an ACH processor ID. So when our service bureaus process and close payrolls, there are ACH credit payments, and those ACH credit payments could be direct deposits, they could be tax payments, they could be impounding taxes from the client. But if they partner with an ACH provider, like some of the ACH providers are NatPay, Cache, Intercept, those are all ACH providers. And what they do is they literally, they are not a banking system, they just move ACH files for the service, for the payroll service providers. So they're taking all the direct deposit files and moving them to where they need to go. And depending on who the payroll service provider partners with, they will need a processor, that their ACH provider may have a processor ID. Not all of them do, like NatPay. NatPay is who a majority of our service bureaus use to do their ACH processing, and they don't require a processor ID, but there are a couple of providers that do require a processor ID. The next two pieces of information are EFTPS master PIN and EFTPS master PIN. So the service provider, the payroll service provider, our service bureau, can elect how they want to pay their 940 and their 941 taxes. They can either do that via an ACH or they can do it via the EFTPS software. When they're doing EFTPS, they register as a batch provider, and when they register as a batch provider, then they receive a master TIN and a master PIN, and those two pieces of information need to be in that EFTPS file when they're uploading those payments. When they're uploading those payments, those two pieces of information need to be in that payment file. So, and this is where the information goes so that it is included in the payment file. In the next column, you have your disable food or credit reduction. What food or credit reduction relates to is state unemployment. So every state has a Department of Labor, or a department that handles unemployment claims and insurance and the information that's needed for each employer. They're paying that unemployment. Some states actually have an employee side and an employer side, like Pennsylvania. So if that state borrows money from the federal government and they don't pay it back within the specified time, then that state, the employers in that state, are not allowed to take the reduced rate for federal unemployment. So there's an additional percentage that they have to pay. Every employer for that state has to pay. So you can actually disable that, because what the system does is on the last payroll of the year, if the state that the employer in is one of the states that was mandated to pay the additional amount, it will calculate it automatically and pay it. The Service Bureau can turn off that calculation here, or they can actually turn it off at the company level. So again, there are two different options for that particular option. The next two fields are for the Service Bureau. So the Service Bureau is charging the payroll clients for doing their payroll, so their payroll service fees. And that account has to be kept separate from all other accounts, because the government says that the payroll service provider cannot commingle their money with the client's money. So if I'm impounding taxes for the client, I can't stick my invoice fees into that account, because the tax money is not my money. It's the payroll client's money, and I'm just maintaining it and paying it on their behalf. So we always add in the account that the invoice fees need to go to under the office setup. So this is for that, and usually it's called an operating account, or it's referred to as an operating account for the service provider. And so the routing and account number would go here. And then also, when they generate invoices within the system, and the invoices will generate with every payroll, when those invoices generate, there's an invoice number. And if you leave this field blank, it will automatically populate the invoice number. And that invoice number is about 20 characters long. It has the year, the month, the day, the payroll ID, and the company ID. So it ends up being about 20 characters. If the service provider wants to start with an invoice number. They can put whatever invoice number they want to start with, and the system will start with that number and then move forward as they produce invoices. Over on the right-hand side, the service provider also has the ability to set up GL numbers for their accounts receivable and income accounts, and that all refers back to the invoices or the billing codes. So they actually can set, again, they can set that up in a couple of different ways. They can add the main accounts here, or they can actually put the account numbers on each individual billing code. So it really just depends on how they want to handle that GL accounting information. And that accounting information is strictly for the payroll service provider, and allows them to export a QuickBooks file or a Peachtree file or a CSV file that they can then import into their accounting software. So that's what this is used for, the tracking of their invoice fees and their accounting for their accounting purposes. Under the next tab, we have email options. So in the system, you actually have lots of different processes going on, and with those processes, some of those processes can generate emails. There's a general email, there is a process and close notification, and there's a production notification. These three emails, the general, the process close, and the production, are return email addresses. So as I'm doing tasks within the system, and we're generating those emails that are going out, like payroll notifications. So you can set up a notification that goes to the client that says, hey, it's time to do your payroll. Well, when that email goes out, it needs a return email address, and that's what these three email addresses are. They are the return email addresses. So if they don't have a return email address set up, then the email that's generating through the system won't actually go. It will error out. So again, this can be a generic email account that they set up for their office, or if it's a smaller office, it would just be the main contact person for that office. Tax notification. The system actually generates a warning or an alert when there's tax issues like tax liabilities that are over $100,000. So if my payroll client runs a payroll and their 941 taxes are over $100,000, those have to be paid the next business day. So if my pay date is the 11th, then those tax liabilities have to be paid on the 12th. So someone in the office, the processor who's processing the payroll, will get a pop-up message on their computer, but we also want to send a notification to someone else in the office just to make sure that it doesn't get missed, because that could incur lots of penalties and interest if they miss that type of payment.
Makes sense.
So this would be, who do we want that notification to go to? The office alert. Go ahead.
Add multiple emails in there, like multiple people?
Yes.
I mean, I get setting up a group, but could they do multiple?
You can. You can do it separated by commas.
Okay.
Mm-hmm. The office alert notification, you'll notice there's a tab here that says office alerts. And on this office alert tab, we already have everything set up so that they can generate a report, and what it's doing is that anytime this is changed, you can generate a report to see what was changed. You can run it for a date range. It'll tell you what was changed, who changed it, and the date and time they changed it. They can also elect to receive an email on items that are changed, and all they have to do is go in and check the box, and then if anybody comes in and changes that piece of information, then they would receive an email on it. But the email that they want it to go to goes here under the office alert notification.
Okay.
The system also allows you to fax items directly from the system, so I don't have to print out things and then go and fax them in a fax machine. You can actually fax it through the system. So they have a fax server and they have a fax server email address. If they leave it blank, it will actually use Apex Software Technologies fax service, and then there is a fee that is associated with that, and that fee is listed in their agreement. If they have a fax service, their fax service would have provided them with a web address, and that would go under the URL, and also an email address, and that would go in the fax server email address field. So if they're going to be faxing from the system and they want to use their own fax service, they need to fill those in. Otherwise, if they randomly fax stuff through the system, they will be charged a monthly charge for the faxing service. All right, the next section is the payroll reminder message. So when you're setting up clients, you can actually set up a reminder message that goes out that says, hey, it's time to do your payroll. Typically, you would set that up to go out prior to, so how many days, I'm going to put 2, how many days prior to what do you want this email reminder to go out? So I'm going to say I want it to go out prior to the call date. I'm going to change that to 1. So 1 day before their call date, and their call date would be the date that they are supposed to process payroll. And how many days prior to the pay date are they required to submit payroll? At least 2. Most ACH providers want a 48-hour turnaround time in order to process the ACH files correctly. So you can turn this off and on so that the message is sent at each individual company. You actually have to turn it on. It won't automatically default to being on. It defaults to being off. So at the company level, they have to turn the message on, and they can override the notified, the days prior, and the required days. So it could be different for every single company, or they can leave it blank and it'll default to the office settings. The message actually pulls from this block. So they can't make it an individual message for each client. It's going to pull it centrally from here. And you'll notice that in the message we've put in some automatics. And the automatics, for example, this says pound, payroll frequency pound. What it's going to do is it's going to look at the payroll client, and it's going to say, oh, this is a weekly frequency. So it's going to say your weekly payroll for check date and whatever their pay date is it's going to populate that information automatically based on what the client's current information is. Does that make sense?
Yes, that makes sense.
Okay. Now, the system, these reminders will take into consideration weekends. So if they don't want the weekends to be taken into consideration, they would say include weekends, and then that way it knows that it shouldn't count the weekends as part of those days. The payroll notification message. So when you print payroll, so I've processed payroll, I've closed payroll, and now I'm going to print my payroll. When I print my payroll, I can have a notification message go out to the client to let them know I've completed payroll, I'm done with it, so that they know to anticipate that they're either going to get a payroll package via, a shipment, or they're going to get their payroll package via email, or they can go to one of the portals for the client and retrieve their payroll package. So we don't pre-fill this message. They have 250 characters that they can pre-fill that message with. The next tab is the tax option screen. So with the tax option screen, the top section is based on electronic filing. So there are different agencies that allow you to do electronic reporting, not payments, but electronic reporting of information for the taxes that were withheld for certain periods for the payroll clients. So in the top left, you have your EFIN and your E10. Those are for 940 and 941 reportings. In order to get an EFIN and an E10 number, the service provider has to register, and that registration could take up to 45 days. Someone has to be fingerprinted, they have background check, so they have to go through all of that. Now, the electronic reporting of 940s and 941s at this time, they can generate the file in the system, but they can't upload the file from the system. That has to go, we actually have a third-party provider called 941 Express. So the Service Bureau would have to partner with 941 Express, and what they would do is they would generate the file, and then they would transmit it to 941 Express, and then 941 Express would upload it to the IRS. But the Service Bureau still has to register for the EFIN and the E10 number. Florida has an agency ID that has to be in their electronic file. If you're doing 1099 reporting electronically, there's a TCC number, and you would register for the TCC number through the FIRE system and the IRS website. New Jersey has 3 pieces of information that needs to go in their electronic file. They have a New Jersey taxpayer ID, they have a state withholding ID, and they have a mailbox ID. And again, they would register with New Jersey to get those pieces of information. Nebraska has an FTP user ID. Ohio has a state employer account number or a taxpayer account number. Indiana has an XML ID. Maine has a license code, and New York has an agent ID. All of those require registrations by the service provider. And so if they have payroll clients in those states and they're going to be filing those taxes electronically, then they need to register with those agencies as a, typically it's called a bulk provider. It may be called an agent. Each state calls it something different. So they would just need to make sure that they register with the agency to be able to electronically report as a payroll service provider. Over on the right-hand side, you have your EFW2. So to electronically report the W-2s at year end, so at year end they're going to generate a file for the Social Security Administration that has all of their payroll clients and all of the information for all of the employees for all of the W-2s. They have to register as an agent with the Social Security Administration. So once they register with the Social Security Administration, they'll be assigned a user ID. The user ID would go here, and then when they generate the W-2 file, it's going to have that user ID information in the file, and it's literally their login to the Social Security Administration. That's their username. That's what they're assigned. And so that information has to be in the file. The EFW2 agent indicator, for the majority of our service bureaus, I'm going to say 99% of the service bureaus, it's going to be blank. Any of the options that they choose under the drop-down will make all of their payroll clients' employees report under their EIN number as though they belong to them. So the items that are listed there would be either for a PEO or common paymasters, meaning that those people actually own the employees and they're leasing them out. So again, 99% of our service bureaus, it's going to be blank. Their notification, the options that they have for notification are email, internet, or U.S. Postal Service. In the 941 section, you're reporting information, and this is used for the paper returns for the 941's reporting agent. So every payroll service provider is going to register as a reporting agent for 940s and 941s. They're going to acquire a signature PIN, and they have to do that through the IRS website. The paid PIN, the P10, is for paid practitioners. Typically, it refers to CPAs. So CPAs are required to have a P10, a paid practitioner identification number. Payroll service providers don't have to have a P10 unless they are a CPA. Then they would have to have it. And so if they want the P10 information filled in, they would put their paid practitioner identification here, and if they want the paid preparer section of the 941 filled in, they would check the box. In the bottom section, the Service Bureau, we have batch packages, and we have batch packages for quarterly reporting, and we have batch packages for annual reporting. So the information, again, in the bottom of the screen is for the reporting side of the taxes, not the payment side of the taxes. We're going to go through the payment side of the taxes once we get into the company setup, because all of that is controlled at the company level. But at the Service Bureau level is where you control all of the reporting side of that. So in this screen at the bottom, you'll see a list of packages, but you also have to tell it when you're generating the tax payments, if the tax payment is check, then what format should the check be in? The majority of our service bureaus, it's always going to be normal. The legacy is a leftover from some custom programming, actually, for a select handful of service providers that came from a specific software. So the majority of our new service bureaus going forward will always be normal. And then your W-2 formats, you have 4-up flat, which means it's just a W-2 that they're going to fold up and stick into an envelope. 4-up folded means it's pressure sealed, so there is no envelope. They're going to run it through a pressure sealer and seal it up. And then a 2-up Guam. The majority of the service bureaus will not be in Guam, so they wouldn't use the Guam option. You have the same options for your 1099s, miscellaneous flat and miscellaneous folded. Folded always means pressure sealed in the system. So as I mentioned in the grid, I have my quarterlies, my quarterly packages, and I have my annual packages. So with my quarterly packages, I'm going to set up a quarterly package for my tax agency. In the agency packages, whether they are quarterly or annual, I'm going to resort this by clicking on the column header. The agency packages, the only thing that will ever be generated in the packages should be the tax forms and the tax checks. So when it creates these packages, you're going to print them out. You're going to all of the clients will be in one package, and you'll ship them off to the agency. And again, this is the paper returns. Then you're going to set up a package for annual and quarterly for your impound clients. So for all clients that I'm impounding, what do I want to be in those packages when I batch them? So if you're going to print them out and ship them, you're going to need a shipping label. And then you have the option to do summary reports, which are system-generated reports, and tax forms. So you can do one or the other, or you can do both. Keep in mind that if you're going to do both, the more reports that you generate in a package, the longer it's going to take to create that package. So with the summary reports, there's 2 to 3 reports that would generate in the package, and then the tax forms, the number of tax forms that would produce in a package would determine how many states the client is actually in. So you want to make sure that you take into consideration, if you're choosing both, how long it might take to produce those packages. So again, those are options. They can do summaries, they can do forms, or they can do both. They will never create the checks in the client packages. The checks are always created in the agency packages. You can also set up annual packages for CPAs and quarterly packages for CPAs. So if your payroll client wants you to send your CPA a package as well as your package, you can do that. You could also opt not to create an additional package and just put the CPA as part of the email setup if you're emailing it, so that they can get emailed on those packages. It just depends on how the client and the service provider want to handle those services. You also have annual and quarterly packages for non-impounding clients. And every service bureau has the option to handle their non-impound clients differently. So some service providers will, even though they say they're not impounding the taxes, they will still pay those taxes on behalf of the client, and they may do the reporting for the client. So they can say, even though we're not making the payments, we're still going to send the payments for you, and we're going to send your returns for you. So again, what do they want in those packages? They want to generate the payments with the non-impound clients package, because they can ship them with that to the client and make the client send them in, or do they want to just continue to do it with the agency package and just send the non-impound client the returns? So again, they can pick and choose what they want to be in those packages. On your office alerts, we already talked about that and how you can generate reports for any items changed, or you can elect to receive an email for any items changed in the office setup. Typically, I recommend that anything that's in an electronic file, that they should flag to have an email reminder go to them, because those are critical items, meaning that if somebody changes it, it could cause a file to be rejected, or it could cause it not to go properly. So anything that has to do with reporting, I typically would also recommend that for their routing and the invoice account, that somebody get an email alert on that in case they've given an employee access to their office setup and the employee decides they want funnel all of the invoice fees to their own account. Again, somebody in the office would get an email letting them know that information has been changed. So are there any questions?
I'm just processing it. So
okay.
I guess questions for now, as far as thinking like mini tutorials, would you, and because you got there by going to system up at the top, right?
I went to System, Office, and Affiliates.
Okay. So if I were to do a tutorial, would you recommend doing all that in one or breaking it up per tab?
I would recommend doing it, well, if it's a new service bureau, it would be all in one, because they're going to, once they set up their office, they're not typically going to make changes to their office. It would be rare that they would make a change to their office setup.
Okay. And all those fields, they would, if they're a trade, they would understand what those are. They're not going to have a lot of questions as like, you know, is that something I need? Should I do this?
Right. A trade is not, but an entrepreneur is. An entrepreneur is not going to know. But I believe in the new Service Bureau book that, you know, the documentation that they send out to the initial, once they have initially signed up, I believe it covers a lot, like it covers a lot of the tax options and registrations, I believe, in that book or in that document.
Okay.
So.
Okay.
Now, the second piece of that, when I started, I said they could have multiple offices, and this is probably where I would break it down, because the multiple offices, they can only have one main office. So you see how this says main? They can have channel partners, and for those channel partners, they can set up additional offices. But you'll notice that I can only have one main office. I can't have multiple main offices. And you'll notice that when I highlight this additional office, that the license info, the email options, the tax options, and the office alerts are grayed out. These items have to come through the main office.
Okay. So these companies listed, these offices, these are all different companies that they do payroll service for.
These offices are so Apex Payroll is the service provider. And then as Apex service provider, I can have additional offices that I work through. Like I can, let's say I'm Apex Payroll and we have our office here in Atlanta, but I purchased a payroll company out in California. I can set up an additional office for my company out in California.
Okay. So when you're saying Apex Payroll, just so I'm not confusing the layers here, let's use a different example, because you're saying payroll services. So that would be like an ADP.
Yes.
So, okay. So if ADP had multiple office and they were servicing multiple clients, so I'm setting up multiple ADP, but one's going to be like the corporate office, and they're in charge of, they're going to set up the reporting for all of it, or all offices. Is that
correct?
Right? Okay.
That's correct. So all of the email notifications are going to come through the main office. All of the tax filings are going to be filed under the main office EIN. The customization you can do for each office. So if my office out in California wants a different logo, different contact information, I can do that. I can customize the reports, what the client sees for each office, but all of the back office information still has to go through the main office.
Okay. So those aren't at all their clients listed in there. Those are all...
No, there's all offices.
All right. Yep. Just had to get that straight in my head. Okay, got it.
Okay. So as I mentioned, you know, with the main office, I have access to all of these tabs, but with the secondary offices, I only have access to the general information tab, so I can customize that to the secondary office. I can also customize the cover page to the secondary office, and I can also customize the logo and the reporting information for that secondary office. But I cannot I cannot report taxes from the secondary office, or the email, all the emails will go out of the primary office. So all of the back office stuff still flows through the main office.
Okay.
Okay, let's look at what we have here now. So,
and if they wanted, let's say one of our service providers, one of our service bureaus wanted to have a secondary office, and they wanted to that secondary office to have all of the last 4 options, then they would have to buy a second service bureau. So in essence, they would own 2 service bureaus instead of 1.
Okay.
Then it would be a whole separate database.
Right. Okay.
Okay. All right. Exit there, close there. Okay, so then back under systems, you have your printer set up. Now, when we talk to a service bureau and as part of their initial training, we go through first-time logging in steps, and that is actually sent to them when we send out that welcome email, and they get a first-time logging in steps. And first-time logging in steps are computer-specific. So when a user logs into the system is user-specific, and it remembers how they like to see their screens and how they want to organize their screens and how they like to see the layouts. But the first-time logging in steps are computer-specific. So if I have a computer at my office, and I also have a computer at my home, and I also have a laptop, for Employer on Demand, I would have to do those first-time logging in steps for all 3 of those computers, because it's not user-specific, it's computer-specific. So let me show you where those steps are. I'm going to backtrack just a minute. So on the login screen, before they log in, there is going to be, I need to close my email. So if we go to Employer on Demand, before they log in, oh, it took me right back to here, log out. Before they log in, over on the left-hand side, it says click here for more help. And if this is your first time logging in. So before they log in for the first time, and again, we send them these steps in an email along with the entrepreneur, the trade welcome package. They do the Employer on Demand client install, and they do the faster printing install based on which operating system they have, whether it's a 32-bit or a 64-bit. And then depending on what version of Windows they're on, they may have to run one of the RDPs at the bottom. Once they complete running these installs, then they're going to reboot their computer. If they don't reboot the computer after the install, then it's not going to update their computer. And again, that's computer specific, not user specific. So they would have to do it on every single computer that they have. Now let's see if it's going to let me log back in. Go here. So then once they log in, there we go. What did I put? Oh, I keep typing the wrong thing. There we go. So once they log in, they have to complete the setup of the printer. So in that first time logging in steps, there's the printer, the faster printing install. The other piece of that is that once they log in, so after they do the faster printing install, in the bottom right-hand corner, they're going to see the thin print. It's or print client VC. That's the faster printing, and I can double click on that and look on the assignment tab, and I should see my printers listed here, and they should be selected. So there are my printers, reports 1, reports 2, and the copier. The other piece of that is under systems and printers, they can assign printers. So I can say for each one of these items, which printer do I want it to go to? So I'm going to say for my carrier, now the carrier, We have an integration with FedEx, UPS, and USPS where they can print the labels directly from the system. And if they're going to print those labels, they can designate a specific printer, and they can also designate a tray. So I'm going to use my reports printer, and I'm going to say I want it to go to tray 1. And then for your checks, you can say your check printer, and you can let it automatically select the tray, or you can give it a specific tray. And so they can do that with each type of item. So they have their carrier, which is UPS, FedEx, or USPS. Checks to mail would be pressure-sealed checks. Checks to mail legal would be legal-sized pressure-sealed checks. Their reports, so standard reports. Invoice, they can make the invoice go to a separate printer if they want to. And their W-2 forms and the W-2 reports. So again, they can pick and choose trays as well, depending on, and these trays are going to fill based on the type of printer and the print drivers that are associated with that printer. So again, they can make those selections based on the printer they've selected and how those printers are set up. So, and again, this is, now that piece is user specific. The faster printing is computer specific, but the setup for systems is user specific. So each user would have to do that step once they've logged in. Make sense?
Yeah, seems like a lot of printing.
Well, there is a lot of printing. There's a lot to print. There's a lot to print.
Right. I see that.
Okay. Also under systems, they have their logs. Anytime they fax or email something through the system creates, they post it in a log, and it's a lot of information that we track. So if someone says, for example, if we bill somebody for faxing something because they faxed it through the system, and then they say, no, I never faxed anything through the system, we can actually come here and look and then make sure that, did they fax? Because there's going to be a log of it. It's going to track all these pieces of information so we can keep track of what's been done, and they can keep track of what's been done. So it's a lot of information for them to review. Also under systems and logs, they have clock downloads. Now the clock downloads are not going to be as prevalent as they used to because we're moving away from analog clocks. So the analog clocks actually need a fax line or an analog phone line to download through, whereas where our newer clocks are internet-based, so it transmits information via the internet. When the older clocks download, we actually track what time they came in, was the download successful, were there any errors, did they actually upload? So again, it's just tracking the information that's coming into the system. And you still have a handful of service bureaus that are still using the analog clocks. So they will be phasing those out in the future. So also under logs, you have void payroll. So when you're processing and closing payrolls, so I can go in and enter in a payroll, and I can process that payroll, and I can close that payroll, and then I can say, oops, I messed up. I need to just start over with this payroll. I can void the entire payroll as though it never occurred. Well, when you void an entire payroll, you actually have to tell the system why you're voiding it. So, and then it tracks that information. It tracks the company, the pay date, the payroll ID, why are you voiding it, the comments, who voided it, what date was it voided, and was there a charge, because you can actually opt to charge the client. So if you have a habitual client that calls in every payroll, that you've done the payroll, and every time they call back and say, wait, I need to make changes to it, well, you can actually bill that client for that time that they're causing you to have to go back and redo that payroll. So again, just a log that tracks voiding of entire payrolls. Also under logs, you have Process Manager. So that what the Process Manager does is it allows you to go out and process payrolls. So I can enter in my payroll and I can process my payroll. And while I'm doing that, I can move on to other things and do other things. And once that payroll has completed, I'll come back, the system will come back and pop up a message on my screen that says your payroll's done with processing or closing, whichever task I've asked it to do. So the system will actually track all of those tasks. It'll tell you, was it processed, was it closed, what was the company, who submitted it, how long did it take, were there errors. So it tracks all of that information. And also under systems, you have your announcements. Now these announcements are geared towards, so me as a payroll service provider, I can set up announcements so that when my payroll clients log into the payroll client portals, that they can see the announcements, and the announcements appear in the bottom left-hand corner of that login screen. So if I were logging in as a payroll client, in this bottom left-hand corner, I could see the announcements for this payroll service provider. And those announcements, when you're adding in an announcement, you give your announcement a title, and then the message is what actually shows up on the screen. So the message is what the payroll client would see. You can tell it when you want the message to start and when you want it to end. So you could go in and set up items that are constant, and then you could set up items that may start. Like if I wanted to announce that we're going to be closed for Memorial Day, I could set up an announcement to start the 1st of April, and then after Memorial Day it would expire, and so it wouldn't show up anymore. So again, just a different way to communicate with the payroll client. And then you also have advertisements. So when a new service bureau is added, we default in 6 or 7 advertisements, and those advertisements are generic. So when they're adding in the advertisement, and they can choose to turn it off and on because it defaults to being inactive, so they can actually activate it if they want to. And it's just the title, the description, and you can put in an image. And you can also put in a link so that when they click on the image, so it's going to be scrolling through the login screen. And again, it would show up for the client in the bottom right. So when the payroll client logs in, they're going to see that advertisement in the bottom right-hand corner. And if the image is there and they click on the image, if there's a link that you've put in there, then it would take them to that link. Now, we default these in, and again, we default them in as inactive, so the Service Bureau can make them active, and they're not charged for that. But if they want to create their own advertisements, then they have to have private label turned on. So they wouldn't be able to create. See, the ad option is grayed out because this service provider doesn't have access to private label.
And these advertisements, do they go to their affiliates, or are they pushed out to their clients?
Payroll clients.
Who sees them? Okay, their
the payroll client sees them. Mm-hmm.
Okay.
So on the login screen, when the payroll client logs in, before they click on their product, they would see the advertisement here, whether it's Employer on the Go or Employer on Demand. Advertisements are going to be in the bottom right.
Okay.
And it's going to, based on the priorities that I've set, so I've set these to display in a specific order. So the 401k would pop up, then the HR support, and so it's going to scroll through them in the order of the display order that I've set up for them.
And can you change the order?
Yes, you can change the order, and they don't have to make, like if I don't want to offer I-9 on the demand, I just make it inactive.
Okay.
So I can pick and choose which ones I want to use. I just can't create my own unless I have private label turned on.
Okay.
Okay.
The check marks kind of seem backwards to me. It's like if I created a question and it said, "The sky is not blue," true or false?
Mm-hmm.
True.
So to make them active, you uncheck it instead of checking it. Yep.
Yeah. Okay. Okay.
All right. Okay, so that's everything under systems. I'm going to move to global next. Do you want to take a break before we move to global?
I'm good.
You're good? Okay. So in the order of events, I would move from systems to global. And under global settings, the global settings are, again, for the service provider. These are items that are part of the back office for this payroll service provider. One of the main sections is the impound and OFI banking. So there's two different types of banks that are set up under this global bank system, and these banks are for the payroll bureau, the service bureau, not for the payroll client. So as a payroll service bureau, I need an OFI, and you see there are multiple OFIs here, and the service bureau can have more than one OFI, but the majority of them are only going to have one OFI. And OFI is an originating financial institution. You don't put money into the account and you don't take money out of the account, it just moves your money. So when you're processing closing payrolls, there are ACH files that are created, and those ACH files have to be moved. So they have to, it's going to debit the money from the client, it's going to credit the employee if they're doing direct deposit, or if you're impounding taxes, it credits the tax impound account. So the ACH provider, or the OFI, is the processor of those files. Now, depending on who they partner with will determine how this is set up. Because, for example, National Payment Corporation, which is who a majority of our service bureaus partner with, and they would be an OFI, they don't use a routing and account number. So the setup for National Payment would be 9 zeros, because it does have to have a routing and account number, and an account number. And it told me that it wasn't part of a routing database. I'm like, okay. And then that would be it. But again, this information is going to be based on who they partner with as a originating financial institution. So they can partner with an ACH provider like National Payment, Cache, Intercept, or they can use a local bank for to process their files. So it's strictly up to them what they want, who they want to use. But again, so their provider would provide the routing and account number and the bank information. On the OFI, you do not fill in the check information. On the direct deposit file pre-funding, again, since I did Nat Pay, I'm going to put Nat Pay here, and then the routing number would be 9 zeros. And then I'm going to check the box that says, yes, we know, debit company account. And so that's a basic setup for an OFI. There are different options for OFIs. Let me cancel this. And we're going to just look at, DPS. So with DPS, again, they didn't use a routing or account number. On the OFI, you always skip the check information. And on the direct deposit file pre-funding, it was the same as NatPay. The information on this screen controls different pieces of the ACH records. Like there's a header record, and in that header record, they can control how that's treated. And again, that's all going to be based on who they partner with as their OFI. They also have unbalanced file options, and an unbalanced file could mean, again, based on who they use as their OFI provider, it could mean different things to different OFI providers. But typically an unbalanced file means that there's going to be one side. ACH files typically have a credit and a debit, and if it's an unbalanced file, it's missing one of those pieces, the credit or the debit. Because with an ACH file, you're saying debit the money from here and credit the money to there. So, for example, like with a direct deposit, you're debiting the payroll client and you're crediting the employee. So that's a balanced file. Some OFI providers don't want a balanced file, but they will tell you which piece of that they don't want, whether they don't want the debit or they don't want the credit. And again, it's all based on who they're partnering with. So setting up these options are going to be very payroll service bureau specific. So this would be one of the things, Genesis, that you want to find out up front. Who are you partnering with as your ACH provider? Because this is a critical piece of their setup, but until you know who they're partnering with, you don't really know how to tell them to set this up. And this is not something that you could do a generic webinar or generic recording on this, but you're not going to be able to give specifics because you need specifics in order to set this piece up.
Okay.
So this would be a major question for me during training is who are you partnering with for your ACH provider?
Okay.
And then the piece of that is that we do a standard NACHA file for our ACH records. And so if they're using like a Bank of America may want something different in their file. And what is that? And so they would have to provide the specifications from Bank of America to tell us what, if they want something, outside of the norm of a standard NACHA file, what is that they want so that we could tell them how to set this up. Does that make sense?
Yep.
Okay. I don't think any of these are set up with any information. But again, it's kind of hard to set it up because you don't really know what each ACH provider is using. I can tell you that when you're setting it up, you do have to have an ID. And typically I tell them to make their ID something that's recognizable to them so that I know when I'm selecting it from it. See, if I were selecting this from a drop-down box, I would not know that this is my OFI. So I typically will tell them when they're creating their bank IDs, for example, I might do, instead of doing NatPay, I might do MPOFI. And then I know that this is my OFI, and that it's National Payment Corporation. And then it has to have a type of OFI. And then again, for every file, you have to have a routing and account number. And so that's automatically, you fill that in based on the information that the OFI provides to you. For an OFI, you don't use the check information. And then depending on what they need in the file, you would complete the direct deposit file pre-funding tabs. So with pre-funding, let's talk a moment about pre-funding. Pre-funding means, let me back step just a minute. So when a service provider is processing and closing payroll for a client, a payroll client, there are going to be ACH files because they're going to debit the client for invoice fees. They're going to move direct deposits for the payroll client. They may impound and pay the taxes for the client. They may also impound and pay vendors for the clients. So they're moving money from one place to the other. Sometimes an OFI or the bank that they're dealing with may require them to pre-fund part of that payroll because what they're saying is that we don't want to take any risk when we're moving this money. So anytime you move money on behalf of people, you're taking a risk that that payroll client doesn't actually have the money to move, but you won't actually know that for 3 to 5 business days. So by the time you figure out that they don't have enough money to cover their direct deposit, the employees have already gotten their direct deposit. So this is the reason that some agencies require that you pre-fund. And if they are going to require you to pre-fund, they're going to provide you with a routing and account number that they want you to pre-fund that information into. And then your setup is going to be credits, debits and credits to both. And then you're going to tell it which of these items you're going to be pre-funding. So let's say we're pre-funding the direct deposit. Well, now I've said instead of taking the direct deposit from the client and give it to the employee, I'm going to make an extra stop. I'm going to take it from the client. I'm going to put it into this pre-fund account, and then I'm going to pay it from this pre-fund account. Well, I've added an extra day of movement in there, so I can't run this payroll 2 days before pay date anymore, because now I have to allot extra time for that additional day or that additional movement of that money. And so how many days prior to the pay date do I want this to move? So I can say I want this to move 3 days before the pay date. Well, if I'm going to move the money 3 days before the pay date, I have to run the payroll at least 3 days before the pay date in order to get the money to move.
Okay.
Make sense?
Yeah.
Now, there's also an option here on the right-hand side that says if I'm doing secure pay, which is where I'm debiting the entire payroll from the client, I can exclude the direct deposit from that. So if this were unchecked, it's going to debit everything from the client. It's going to debit the direct deposit, the live checks for the employee's net pay, the taxes, the vendors, all of that. It's going to debit it. Lots of times the payroll client will not debit the direct deposit. They don't want the direct deposit debited, so it's still, instead of moving from the payroll client to the service bureau to the employee, the direct deposit would still move from the payroll client to the employee. And so in order to make that happen, you have to check the box, and then you have to tell it when do you want it to be effective days prior to the pay date. So typically you want direct deposit to be in the employee's account on pay date, which would be a 0. So again, all of these are questions that you would need to predetermine or determine when you start the process of training that payroll client, I mean the service provider, that you would need to know this information so that you would know how to instruct them to set this up. This is not something that you can just say, here, do it this way, because it's never going to be the same for every service bureau.
Right. So something would need to probably go out to them saying, here's all the items you'll need to do before you want to take this web-based training, or that they would need to get.
Right. Here's the information. You need to have the information for your ACH provider. If they are, well, even if they're a trade, a lot of trades don't necessarily use an ACH provider. They might use a local bank. But you still need the information so that you can set it up because of the way that our system is based and how it works and the information it needs in order to generate those ACH files.
Okay.
So this is one piece that there needs to be questions prior to the training so that during the training, and again, it wouldn't be something that you could do a webinar or a tutorial on and then have them do it. You could. It would be a basic, you need to set up an OFI, here are the pieces of information you need. But my guess is that depending on who their OFI is, you can't say, well, here's the setup for NatPay, here's the setup for Cache, here's the setup for Intercept, and here's the setup for Bank of America, because that may be different for every single payroll bureau.
Right.
It might not be the same for every payroll bureau. So,
okay.
Make sense?
It does.
Okay. So the other item that they would set up here would be their impound accounts. And the impound accounts could be a tutorial that they could set up, because an impound account is going to be the same regardless of where they bank. It's going to be the same. They're going to need a bank ID. So they can have like different types of impound accounts. So I can have a global impound account, meaning that all of my funds that I'm going to debit from the client, I'm going to put it into one account. Or they can say, I want to split it up. I want to put the net pays into a payroll account. I want to put the taxes into a tax account, and I want to put the vendors into a vendor account. So this is decided by the Service Bureau and how many accounts they want to have. Now, I call it an impound account for global or payroll or taxes or vendor. It's not this different kind of account. It's a business account. So they go to their bank and open a business account but the system is looking at it based on what did we call it. So if we called it a global account, then when they're setting up their payroll client, the system, if you only have a global account, then the system knows that everything goes into that global account.
So it's like me personally, if I banked with Chase and I opened up 3 different checking accounts and I wanted my direct deposit to be split because I wanted to pay bills out of this one and pay my taxes out of this one, it's just me naming the account so I know where the money is going, right? Or
Right.
what it's for.
And by the type, by selecting the type, so if I set up let's say I'm impounding taxes for my clients, and that's all I'm going to impound is the taxes. If I set this account up and I call it a tax impound account type, then the system is smart enough to know that that's where the tax money goes, because I've chosen that type. Now, if I have 2 different tax accounts, like I have a tax impound account 1 and a tax impound account 2, now I have to, at the company level, at the payroll client level, I have to tell it which one because I have 2, and so if I have 2, it doesn't know where to put it.
Okay.
Make sense?
Yeah, that makes sense. I'll have to see that company level for it to really sink in, but
right.
The concept makes sense.
I'm going to set up a tax impound account. I'm going to say, let's say, usually I will just say, then I know this is my tax impound account. If I call this BOA, I don't know that it's a tax impound account. Because again, the bank ID is what's going to show up in the drop down for the payroll
company level, right?
Yes. When I have a drop down at the company level and I'm selecting the banks that I want to set up for this company, as far as where do I want the money to go to that I'm pulling from the payroll client, if I put BOA here, I have no idea that that is a tax account.
Right.
So
it's not going to show the type that you've selected.
Right. I typically ID my banks based on what they are.
Okay. Makes sense.
So, and then when you fill in the routing number, it's going to tell you that it's found it as part of a routing database or not. If you say yes, it's going to fill in all of the bank information. Now, this bank information will be the regional bank information. So if they want to put, they can update it, if they can override it. I clicked off of it. I can come in here and update the address for the local bank if I want to, but it will always be the regional bank that it pulls from.
Do they need to do that for some reason? I mean, it's still going to
They don't have to. Yeah.
Okay.
It'll still go to the correct place. And then they're going to put in the account number.
So I don't know why they would even want, to change it to the local? Is there a reason why they would want to change the address?
Unless they just deal, if they want to store their local, because they're going to contact their local bank.
Okay,
typically,
gotcha.
They may not contact the regional bank, but they might contact the local bank.
Okay, makes sense.
So once you enter in the account number, once you hit enter, it's going to take you to the next tab. Now because this is an impound account and they will be putting money into this account and they will be taking money out of this account, they do need to fill this in. Extensions are not commonly used, so they can skip that. Fractions are the number in the top right-hand corner. Right below the check number is usually where the fraction is, and it may be, may look like this. So that's what the fraction looks like. And again, it's usually the number that's listed underneath the check number in the top right-hand corner. Now, if they don't fill in the fraction, it won't stop the checks from producing. It would just produce without the fraction. And this is an internal tracking piece for the bank. The check format is the MICR line at the bottom of the check. Has information that helps the bank to process that check. So the most common check format is it's check number, routing number, account number, and it says extension, but extensions are not commonly used. But this is the most common format that routing or MICR lines at the bottom of your check are formatted in. So by selecting this, if we don't have an extension, then it's not going to fill in the extension. but again, extensions are not commonly used. The payroll service provider can say what number they want to start their checks with. So if I'm starting my check, I'm going to start it at $10,000. Then when I'm setting this up for the first time, this next number also needs to be $10,000. And then as I issue checks from this account, this next number goes up by the number of checks that I have generated from this account. The max number is how many checks do I want the system to generate before it resets the start and next number back to 1. So let's say I set this at 50,000. Once these check numbers have reached 50,000, then it's going to reset both of these to 1 and start over. So you could use it for audit to 1. It's going to start with 1, not 10,000, but 1.
Right. Okay. And then do you go back and reset the max number? Or from 1, I guess you can go on forever. But
yeah.
Would you set?
So it would start over. So if this was 50,000,
it would remain 50,000.
Right. It doesn't update. You'd have to go back and change it if you wanted to go something different. Typically, I don't recommend, unless they're trying to do some kind of audit purposes with the check numbers and they want it to reset ever so often, which the majority of the service bureaus do not. So.
Right. Yeah, you wouldn't want a bunch of checks with the same check number out there. Okay.
Right. Unless they were years apart. If they're years apart, then it usually doesn't create an issue. But if it's within a year or two, it may create an issue. The EFT next number, the system defaults to 1, and I don't typically recommend that they change it. This number is a number that we assign to all electronic money movement in the system so that it can be tracked on a check register. So it shows up as a part of their check register. Starts with 1, and every time there's an electronic money movement through the system, like a tax impound or a tax payment, then it assigns that electronic number. It starts at 1 and it moves forward. Now, if they are doing, if they're making payments via checks, then they can put in their signature and the checks will come out automatically signed. And if they require 2 signatures on the check, they can check the box and pull in 2 signatures. Also, the system will default the void after days to 90, but they can change that to whatever they want. So comments would show in the comments section of the check. And then on the direct deposit file pre-funding, so on my first item, it's called Bank of America, and I'm just going to copy and paste that on that direct deposit file header. And the routing number, oops, I didn't type it in right. I missed a 0. There we go. And then I'm going to say debit company account. Now again, most files are balanced files, and unless they're using a specific bank that says they don't want a balanced file, which is typically, it's not common. It's usually local banks. So if they're in a small town and they're using a small town bank, that's where you're going to run into they want an unbalanced file. The NACHA header record is going to default to what it needs to be, and again, unless they're dealing with a small bank, then they can use that standard format because it defaults to a standard NACHA file format. So, and the majority of the service bureaus are not going to need to change that information, and they're not going to need to use any of the information here at the bottom. So they're just going to leave this line feed checked. And then unless they're pre-funding information, they're not going to fill this in. Usually the pre-fund information is on the OFI and not on the impound account. Make sense?
Sort of.
Sort of.
Yeah.
The banking piece is not something that you can just say to all service bureaus, this is what you do, because it's really based on their banks and what do their banks want.
Okay.
So I would probably recommend that this piece of training would still be handled You could put out a generic tutorial on it, but my guess is they're always going to need help with this.
Right.
So, okay. So, again, they would set up all of their banks, and they can have more than one impound account. They can have a tax impound account, a net pay, a vendor. They can have a global, meaning that I'm going to go ahead and set up a global just so I have that option. And so now I have those two options, and then when we go through the company setup, I can show you how those options would flow down to the actual company. Okay. Back under global, we also have holidays. So when we set up a new service bureau, we default in the federal banking holidays. So there are 10 federal banking holidays. Federal banking holidays are used for tax payments, due dates on taxes, because the Federal Reserve is closed typically on those days, so they can't, on a federal holiday, you cannot send and receive ACH files, EFTPS records, so no electronic money movement on a federal banking holiday. And so that's what these are. You'll notice that here it says all of these are federal banking holidays. So in order for the holidays to be added or to display at the company level and to be utilized at the company level, they have to be set up at the global level. So we've defaulted all of these in. And there are two different types of holidays. So you have, for example, you have Christmas, which is in the month of December. It's a fixed day. It's always on the 25th. And then you have a floating, not a floating holiday, but an instance of a day. So, for example, Columbus Day is in October, but it's the second Monday in October. It doesn't have a specific day that it occurs on.
Right.
If the client, let's say I have a payroll client and they give Black Friday as a holiday to their employees, and I want to add it to the company in order to be able to pay them holiday for that day, I have to add it in. I'm going to call it Black Friday. And it's in the month of November. And it is the third, it could be the third or the fourth Friday of the month. So now it's not a banking holiday, though, because on Black Friday the banks are not closed. So they would not flag it as a banking holiday. So ACH files can still be sent and received on that day. It's just that I want to utilize this day to be able to pay my employees holiday pay. Now, once we default these banking holidays in, so we default in the 10 banking holidays. Once we default those in, we don't maintain those. And so you may say, well, why do you need to maintain them? Because they don't ever change. Well, every 7 years, Christmas falls on a Sunday. So when Christmas falls on a Sunday, the Federal Reserve actually recognizes it on the Monday after that. So what they would have to do is the Service Bureau would have to create Christmas Day observed, December. It would be a fixed day, but it would be the 26th, and it would be a banking holiday. And then once that year is over with, they would have to come in and uncheck the box that it's no longer a banking holiday. So they do have to maintain their holidays, and they do have to make sure that they take into consideration that every 7 years when Christmas and New Year's are going to be on a Monday rather than a Sunday.
Okay.
Okay. But they can add any other holidays that the clients may utilize. We've seen Black Friday. We've seen service bureaus have clients that have a snow day or a floating holiday. And in order to have access to those pieces of information at the company level, they do have to add them at the global level first. Also under global, you have deductions. So deductions came after we programmed the software, we added global deductions. So at the company level, I can set up deductions, or I can set them up at the global level. Typically, when I'm training a service bureau, I will walk through with them the setup of a 125 plan and the setup of a 401k, because those are common deductions across all payroll clients. So if I have a 401k or a retirement plan, then that retirement plan is typically the same no matter where the client is. So for example, a retirement plan could be 401k, IRA. So I'm going to just call this retirement. And because when I can set this up at the global level, and then when I add it to the company level, I can change the ID and I can change the name. So if they call theirs retirement plan 401k, I can change it to 401k. If their retirement plan is an IRA, I can change it to IRA for a simple IRA. I can also override all of these options at the company level. And at the global level, I don't set too many of these because they are very company specific. Not all companies may utilize the same pieces of information. So typically what I'm doing is I'm creating the type, I'm creating the ID and the name, which I can override once I add it to the company, and then the calculation method, which I can also override at the company level or the employee level. Shortfalls, meaning that the employee doesn't have enough money to take this deduction. Again, that's going to be company specific because you're usually only going to run into that if you have employees who are in a tipped scenario where they don't have enough money to cover their taxes and their deductions. Frequency, again, would be company specific. Most deductions are on an every payroll basis, but you do have instances where the payroll client only takes it out the first 2 pays of the month or the first 4 pays of the month. Max amounts or annual amounts. For retirement plans, if they choose the W-2 category over on the far right-hand side, so 401k deferral, if I choose that as my retirement plan, W-2 category, then instead of looking at this max amount, it's going to look at a table that we maintain within the database that they can't see with all the limits for the current year. So for 2017, what are the limits for 401k and IRA? It's going to actually look at that by the options that they select here in their setup. So again, they could wait and choose this W-2 category once they get it to the company level. So once I rename it to 401k or IRA, then I can choose which W-2 category I want to set it up as. At the global level, I would probably fill in the show year-to-dates on checks because most people want to see the year-to-dates on checks. And then also use as a company default, because a company default means that every time I add a new employee, it's going to default this deduction into that employee setup. So it will default it, but it defaults it with zeros. So even though it defaulted into the employee record, it's not going to deduct anything from the employee unless they actually add an amount in there for the employee. And so when we are adding employees, I'll go through that and show you how that works. The center section here in the center is used based on a specific calculation method. So again, this would not be something I would set up at the global level. I would set it up at the company level once I have the deduction added there. But what it's saying is that, let's say I'm doing a retirement plan as a % of gross. But as a union-based company, I don't want it calculated on all gross wages, and all gross wages means if I have regular overtime, vacation, commission, bonus, it's going to lump all that together and take a percentage of that. But if I'm union-based, I'm going to say, no, I only want it to calculate on regular and overtime hours. So then it's going to exclude all other gross, but it will include the gross pay from the regular and overtime hours. And typically you only see that in a union-based company. So again, I wouldn't set this up at the global level. I would set it up at the company level.
Okay.
Now, over on the right-hand side, retirement plans are exempt from taxes, specific taxes. So it's exempt from federal withholding, and it's exempt from every state except for Pennsylvania. So this is the reason I typically will walk them through this setup, because this is a one-time setup. And then once they've set this up at the global level, they don't have to, because I don't see us adding any states anytime soon. Oops. I've actually talked to a couple of different people about having this default into their databases for them, so they don't have to do this.
Yeah, that
but
would be nice.
this should be something that they should walk through. So, for example, I don't remember what the taxability is for SUTA, so I'm going to go to my search bar and say pre-tax. And then it's going to be option 4. So this is going to tell me, if I scroll to the bottom, like a 401k plan is taxable for all unemployment except for Alaska and Rhode Island. So then I'm going to go back to Alaska. I'm going to check Alaska because it's exempt from Alaska, and Rhode Island, but it's taxable for every other unemployment. So they do have the chart to help them with that, but it can be very confusing, because if you look at the chart, so for example, it says yes. Well, yes means it's taxable in that for that agency. No means it's not taxable for that agency, so it can be kind of confusing. So it would be nice if we could have those default, a couple of just the retirements and the 125. If we defaulted in a retirement and a 125, then all the other deductions would be really simple. So, and so then they can save this, and I'm going to see if I have. So there's my retirement. Let's see how the Health 125 is set up. Okay, so this is a cafeteria plan, and they just named it. And again, I wouldn't set any of the collection methods or the frequencies at the global level. I would always leave it generic. Then that way they can override it once they get it to the company. So, and again, there are W-2 categories associated with the cafeteria plan because it's pre-tax and it needs to report on the W-2 a specific way. And then there's the taxability of that. So what is it exempt from? And again, that chart that's in the help files goes through this with them, but it can be kind of confusing. Save that. The other, I would probably set up a miscellaneous deduction at the global level. Just miscellaneous deduction, and miscellaneous deductions do not have W-2 categories, and they're not exempt from taxes. And then I would probably also set up at the global level, I would set up a reimbursement, not deduction, reimbursement. Reimbursements are non-taxable, and they go directly to net. They're not included in gross, and they don't take the taxes from it. They don't pay it to. It does get paid to the employee because it goes directly to net. And we're going to do a calculation method as a fixed amount. Now, because I chose reimbursement, I don't have to worry about the taxability because the system knows based on the type that I selected that it's not taxable. And I would probably also set up at the global level in advance. And once we get it to the company level, an advance would be like a loan that the employer gave to the employee, and now he's taking that back from the employee. And again, it's not, there's no taxability associated with it. So,
Okay.
So now I have some basic deductions set up at the global level, and so these are, again, these would be commonly used deductions. And again, I would give them a generic name because when you pull them into the company level, they are not going to be, I may call my cafeteria plan an AFLAC pre-tax. Somebody else may call it a Colonial Cafeteria 125 plan. So each payroll client may have a different name for their pre-tax health care. So again, I would not give them a specific name at the global level, but a generic name, so that once I pull those into the company level, I can rename them. Does that make sense?
Yes, that makes sense.
Okay. And then again, there are other options here that are company specific. You know, does it need to be reduced from workers' comp, or do they have a company match that they're doing? And you'll notice you can't even do a match at the global level because matches are company specific. So if they are doing a match, do we need to include that in the payment? Some states now tax the employer match. So is this company in one of those states where the employer match needs to be taxed? You can have a deduction continue after the max amount. Decrement means, so let me choose a miscellaneous deduction because it makes more sense to explain it that way. So a max amount is an annual amount. So let's say I put in $1,500 on this miscellaneous deduction. The employee's deduction will occur at whatever amount you've told it to occur at until it reaches the $1,500, and then it stops. But as of January 1, it starts over again because it's an annual max amount. If you don't want it to start over again, you say decrement. Decrement employee, meaning that every time the deduction occurs, it's going to reduce the max amount that it's at the employee level so that once it has met the $1,500 limit, it never starts over again. Kind of works the same way an advance works. Our advance in the system, instead of pulling from a max amount, it pulls from a balance, and you can actually enter the balance at the employee level, and then as the deduction occurs, it reduces that balance. So you can tell the system to treat this deduction the same way it would treat an advance by telling it to decrement the employee. So you have a couple of different ways to do that.
Okay.
You can also, if you have an HSA deduction, so if this were an HSA health savings account deduction, I can actually tell it to direct deposit that deduction, and then in the employee record, I can add in the routing and account information for that health savings account, so that it automatically will put it into the account for the employee. With the Affordable Care Act, the employer portion of the medical benefits, so if I'm getting health care through my employer may be paying a portion of that health care, and that can be reported in box 12 with a code of DD, and so that needs to be selected in order to make that occur. And again, I wouldn't set a majority of these until I got it to the company level because they are going to be company specific.
Right.
Okay. Now, also under global, we have shipping. So as a service provider, I'm going to need to set up my shipping options. There have FedEx, UPS, or USPS. The thing about shipping is, if I'm setting up shipping and I'm setting up FedEx, this shipping carrier, when I'm setting up something at the company level, this is what is going to show up in the drop-down window. is the shipping carrier, not the delivery type. So if this were me, I would actually name this, let me cancel because I'm in ad mode. I would actually name this FedEx Overnight, so that I know that when I select this from a drop-down list, I know what it is. Otherwise, all I'm going to see is FedEx. And how will I know which delivery type it is if all it says is FedEx? So shipping carrier, account number, delivery type, comments, carrier type, user ID, if there's a user ID associated with it, and then the meter number. So the user ID and the meter numbers are all based on our integrations. So I'm going to go to help and online help, and I'm going to search FedEx. And this is our integration. So for each of those integrations, there are different things. So FedEx has an account number and a meter number. And once we activate the integration for them, so they have to request the integration, and then we activate it. And once it's activated, we'll send them the meter number. UPS has an account number. There's no additional global information for USPS. And the USPS labels will print with the tracking number, but postage will need to be added outside the system, so I won't do the postage part. And so then here it gives you some additional information about the selections in the setup at the company level. So, but at the global level, there may be for FedEx an account number and a meter number, and then for UPS there would be an account number. So those pieces of information can be filled in. And they can have as many, and even if they don't use our integration, which allows them to print the labels directly from the system, and they get a discount, so I don't know why they wouldn't use it, but if they choose not to use it, they can still set up the couriers or the carriers here so that they have, when they're setting up the company at the company level, then they have the option to pull those in so the system knows how that package is going. Okay. Also at the global level, we have, I don't know why that keeps popping up. Let me just close it. Also at the global level, we have billing. Now under billing, there are 3 different pieces for billing. You have your billing codes, you can create billing templates, and you have sales tax. So when we create a database, we actually default in 41 or 43 different billing codes. And so in the top, there's actually 2 grids on this screen. You have your billing codes in the top grid, and you have the rate for that code that you're highlighted on. So I'm highlighted on code 100. So the tiers at the bottom are related to that code at the top. So we fill those in. They can change the code number. They can change the code description. Default means that every time I add a new company, it's going to default that code into the company by default. So every time you add a new company, all the defaults default in. Charge types are static, meaning that they can't add to the charge types or take away from the charge types. They can only utilize the charge types that are there. And I'm looking for, and same with the charge frequencies. They're static, and they can only select from the items that are there. Now, in some states, services are taxable. So if I'm a payroll service provider in a state that says services are taxable, I have to set up sales tax and flag the items as taxable. In a majority of the states, it's only tangible items like time clocks, time cards, check stock that they would have to charge sales tax on. The system will calculate the sales tax and add it to the invoice, but it will not make the payments for the sales tax. So the Service Bureau still has to pay those sales tax outside the system, but they can track it through the invoicing of the payroll. Also, at the company level, you can set up minimums. So like when I'm setting on a payroll company, I can say that there's a $50 minimum for a month. And if that payroll client doesn't meet that $50 minimum, then the system on the last payroll of the month will bump his invoice up so that he is billed at least $50 for the month. I can tell it a lump sum amount at the company level, or I can say, no, I want the minimum for this to be $25. And I want the minimum for this to be $15. So I can do it on a per item basis, or I can do it as a lump sum basis. If I'm doing it as a lump sum basis, I can actually tell it what I want included in that lump sum basis by selecting the include in minimum. I can also override this at the company level if I need to. Then earlier when we were talking about the offices, I mentioned that you could set up your invoice account codes, or the Service Bureau can set up their GL account codes on invoicing so that they can create an export and then pull that into their accounting software for their invoice fees. They could also do that per line item here in the billing. And they can also store a QuickBooks class. Now, I can go through as a Service Bureau and add in all my tiers. So here at the bottom for my payroll, I have one rate for my weekly and one rate for my biweekly payrolls. So depending on the frequency of the payroll for each client, I can put in the charge amounts. They can add in the tier numbers. They can fill those in as they need, and the charge amounts. The pay frequencies are static because your pay frequencies are either going to be weekly, biweekly, semi-monthly, monthly, quarterly, or every 4 weeks. So they're typically, there could be an annual payroll, but it's not very common. So, also, if you have a channel partner, we talked about channel partners when we were setting up the offices earlier. So if I have a channel partner, as I mentioned on that office and affiliates, so let me go back to office and affiliates. For this channel partner, the invoice, which is on the license info tab, I can't set up a separate invoice account for this office. So all the invoice fees flow through my main office to this account. So when I'm setting up my billing, though, if I have a channel partner, I can say, well, the retail amount is $35, but I'm going to charge my channel partner $15. So I still bill the client billing goes through the main office, and then I have to pay the wholesale partner the difference of what we're billing and what I'm going to pay them for servicing the client. So that just depends on the channel partner scenario, but you can track that information and you can generate reports based on that information. You also can give a number free. So let's say I do 5 free. What that means is that they would get 5 when I process and close their payroll 5 times. This item would be free for those 5 times. Actually, I'm going to take that back. You probably wouldn't do, you would do 1 free maybe, but if you just do 1 and leave it at that, it's every payroll it's going to do 1 free, as though it were a per item scenario. Well, a base payroll charge is not a per item scenario. It's a whole. It's not per item, but it's a whole. So you would probably, if you want to give them 1 base payroll item free, you would just say decrement. And then that way it would give them that free once and then not ever again. Where you would use the count free more frequently would be under the payroll checks. And under the payroll checks, let's say in this scenario I have 3 free. So every time they run payroll, they're going to get 3 checks for free. So if they have, let's say they have 20 checks, then they're only going to pay for 17. So if I wanted to just give 3 and not give any more after that 3, I would say decrement, and then they would only get 3, and then after they've gotten the 3, then they would be charged for all. Okay, so for each line item at the top, they have to go through and set up how they want their billing. Now, the most common thing that we get is, how do these tiers work? And it's usually on a per item, like a per check item, because there's the way it works, I'll explain to you the way it works, and then I'll explain to you what they commonly ask. So in my scenario, I have 2 tiers. And I have tiers $1.75 from 1 to 50 checks and $1.70 for 51 to 100 checks. So let's say I have 20 checks. Well, 20 checks falls between 1 and 50, so I'm going to be charged $1.75 for all 20 checks. Well, let's say on my next payroll run I have 60 checks. Well, 60 checks falls between 51 and 100, so I'm going to be charged $1.70. What people anticipate is that if I have 60 checks, the first 50 are going to be charged $1.75, and the next 10 are going to be charged $1.70. But that is not the way it works. So that's a common misconception about how the tiers work. Does that make sense?
Yeah. Okay.
Okay. All right. So, and typically you will run into that on the per items, like the per checks, the per vendor checks, the per garnishment checks. So that's typically where you will see that scenario.
Okay.
The other option, other than doing a base payroll, in Genesis, this is where you could probably do an initial training or tutorial that tells them how to set up the items with just a basic. You have your account number, you have your account description, you have your default, your charge, your frequency, you have your tiers. But then you could go back and go into detail, because I have my base payroll set as a per payroll type. So every single payroll, it's going to charge them $35 or $45 if they're biweekly. But there's also a charge type called per bundle. It's called per check bundle. And what that means is it's all inclusive. So I'm going to wrap everything up into this particular fee. And then what I would do is I would say, doesn't matter what frequency I am, and from one check to one check, I'm going to charge this amount. And from 2 checks to 2 checks, I'm going to charge this amount. So instead of itemizing out the billing, I'm lumping it all into one code. So I would have this one code, and I probably wouldn't have any of the other codes, because this is an all-inclusive price. If they have 1 check, I'm going to charge them $35. If they have 2 checks, I'm going to charge them. So you literally have to map out each tier that you're going to charge them, and everything would be bundled together instead of doing like an a la carte type scenario.
Okay.
Make sense?
Yes. The a la carte, the bundle makes sense.
Okay.
Explain to me again the start and the end. You did 1 and 1 and then 2 and 2.
So I was trying to, so if they have 1 check, I'm going to charge them $35 for their payroll. If they have 2 checks, I'm going to charge them $45 for their payroll. So I can make these numbers, I can make this for 2 checks. Oops. 2 checks they're going to get, or I can make it 5. Let's just say I want to do 5. So I'm going to do their payroll, and if they have 5 checks or less, I'm going to charge them $35. If they have 10 checks, between 6 and 10 checks, I'm going to charge them $45. So it really just depends.
Keep adding tiers, and if they have more employees they have, the more checks they got to print, the higher cost is going to be.
Exactly.
Okay, I got you.
Yep. Okay. So this is very Service Bureau specific as well. So, and everybody's billing, they do differently. Some do it a la carte, some do it bundled, some do a monthly billing, some do an every payroll billing. So it really just depends on the service provider and what their billing options are. But again, they can come in and change the code numbers, they can change the descriptions, they have options for their charge types, and they have options for their frequencies.
Okay.
The other options under billing, so under global and billing, they can actually set up templates, meaning that, let's say I am a service bureau and I have I could do it based on frequency, so I could say weekly. This is my weekly billing scenario, and I'm going to tell it which codes I want to include.
I have time the end of this week or next week.
And then I can,
Because, you know, people are off for the holiday and that. So
structure my tiers however I want to structure them. And then so when I'm setting up a client, let me go back and add a couple more to this. I'm going to say delivery. And my delivery charge. And payroll checks. I'm just going to leave that. So now what I've said is I have this payroll package that if I'm setting up a payroll client and I pull in this billing template, it's going to automatically apply just these billing codes to that payroll client. So I could set these templates up based on, do I want to, maybe I have restaurant payrolls, and for all my restaurant clients, I charge the same billing codes every time. Or maybe I have a specific CPA that refers me business, and I can set up that CPA package, and this is the charges that I always charge this particular CPA, the clients that he's referring to me. So the billing templates are just a way to make the setup, when you're setting up clients, make that setup go easier.
That makes sense.
Okay. Now the sales tax, so under billing and sales tax, we have, you have to set it up, and typically sales tax are by county. So the Service Bureau, if they have to pay sales tax on an item, would come in and add the authority that they're doing their sales tax to. And again, this would be what shows up in the drop down, so they want to make sure that they are IDing it so that it's recognizable to them. The description would actually be the agency, what state, what's the percentage of sales tax, how often is it due, how often is it reported. They can do a generic description, and then they can also add that GL code to the sales tax as well. And again, typically the sales tax are paid by county, and they're paid by the county that the Service Bureau is in, not where the payroll client is in. So the system will track those sales tax on the invoice, and they can run reports based on those invoices, but it will not pay the sales tax for them. Make sense?
Yes.
Okay. Okay, so that covers the global billing.
So I got a question for you.
Okay.
I'm following along in On Demand with you, and the breadcrumbs, like where it says dashboard and then companies, your tabs. Mine says dashboard, companies, and then yours went to sales tax, but mine skipped from, like, it's showing additional steps here. Yeah. So like,
okay, because I closed out of the screens. So if I exit out of here, that tab goes away. So if you have additional tabs up here, that just means you haven't closed out your screens.
So you just got to exit.
Those are all the tabs that you have open.
Okay. Okay, so it's not.
And if you click on the tab, it'll take you back to that, and it'll allow you to exit from that tab.
Okay.
Okay.
Yep. Thank you.
Okay. So the next item the Service Bureau would have to set up would be taxes. I usually start with agencies, And when you go into agencies, it starts on the local level. So I have two menu items here. I have local and federal. The local, we default in a few local agencies. This database doesn't have them all. Maybe we can get Kevin to update it if you'll make a note of that, and let's talk to him and see about updating it with all the locals that we default in. But once we default them in, the Service Bureau is responsible for maintaining it. We don't maintain the local agencies or the local taxes. Other than Pennsylvania, we do maintain Act 32 if they purchase Act 32 from us, which is all the Pennsylvania taxes. But other than that, currently we do not. I think there are some plans to change that scenario where we are maintaining all locals, but that's probably in the future.
So we need to update. What was it?
We need to talk to Kevin about updating the local agencies so that it has all the ones that we normally default in for an agency. And he's at lunch right now, so maybe we can catch him after lunch.
Okay.
Okay. So when they add an agency, they give it an ID. So this would be the ID. And you can see how we have these named here. This is California, it's the Department of Revenue. This is California, it's the Department of Labor.
Okay.
So they would give it, like for example, Indiana has 98 different county taxes. So for those taxes, they are paid to an agency. So who are they paid to? You're going to want to ID it so that you know which local it is. Obviously, it wouldn't be called Local 1. It probably has a specific name, and so they would use that as part of their ID. The agency is who is the pay to the order of. So who am I going to be making the payments to, and who am I going to be remitting the reports to? And that's what would go in the tax agency field, so that when the check produces, this is the name that's going to go on to that check. And then obviously the address. You have zip code. It's going to default in as a local. Now with the locals, you do have the ability to make them via ACH credit payment if they allow it. And if they do allow a ACH credit payment, then you have a routing and account number. And so they have to fill that in. They also have to check the option that says, yes, I want to make this payment via EFT. Also, some agencies require, even if you don't, like if I don't have any withholdings for that agency, they still want a zero payment, which is not common, but it does occur. So if the agency was one of those that did require a zero payment, then they would check the box. With an electronic payment, there is always an addenda record. So an addenda record, so when I create this payment, it's kind of like a direct deposit. And in that payment, there's a record that says this payment is for this taxpayer, and it has this tax identification number. It's for this tax period. It's for this tax amount, and it's for this tax frequency. So all of that information is typically in the addenda record. And usually if the agency is providing them with the routing and account number, they're also providing them with the addenda information that needs to go into that record. So they would put that addenda information here.
Okay.
If there are any particular reports that are associated with that agency, then they would add the reports on the Reports tab. And usually those are going to be locals. You can see most of the locals are listed there. And then they would tell it which report and do they want it to be part of the batch type and the form type. Is it a reconciliation form, meaning that there's no payment associated with it, or is it a payment coupon, meaning there is a payment with it? And then the client due frequency, so how often does the client have to pay these taxes? So they can add all of that reporting information to that agency. Now, So they are responsible for adding in their local agencies and maintaining those local agencies. Even for the, I think there's like 7 or 8 that we default in when we add their database, even for the ones that we default in, they are responsible for maintaining them, okay? So we don't go back and maintain them. Now that's on the local option. On the federal option, when they click on that, it will tell them that they do not have permission to edit the federal records. So we maintain these records, and I'm going to sort by the first column. And so now I have an agency for Department of Revenues and Department of Labor's. That's if the agency, so Alaska only has a Department of Labor. They don't have a Department of Revenue. So Alabama has a Department of Revenue and a Department of Labor. And so we maintain all of this information. So let's say I'm a service bureau and I'm in Arizona. And I'm like, okay, this address is not right. I can't just go in and change this address. The Service Bureau has to submit a ticket so that we can research and verify with the agency to make sure that they have in fact changed their address. And then one of our programmers would update the information.
Okay.
So you can also see here the agencies that allow electronic payments. So the Department of Labor for Alabama does allow electronic payments. We already have the routing and account number in here, and we already have the option that says yes, they are allowed to make electronic payments. You won't see the addenda records in here because they're hard-coded in the system in the database, so they wouldn't be able to see the addenda records, but they are there. Anytime you have an electronic payment, there is an addenda record behind it. Okay, so these are the agencies. These are who are we reporting to and who are we sending the payments to. The second part of taxes under global and taxes are the actual taxes. Now the only items that will display here are the locals. So Apex maintains the 941s and the 940, and it maintains all of the state withholding. So you will never see the state withholding taxes listed here. You'll never see the 941 taxes listed here. You'll never see the 940 taxes listed here. The only taxes, again, we default in several of the, and you can see those here, we default in several of the local taxes or what would be deemed local, but we don't maintain them. And again, for example, Indiana has 98 different county taxes. We don't default those in. So that would be the responsibility of the Service Bureau to add those taxes in to their local setup. When they're creating a local tax, they will give their tax a type. So is it a city, a county, a straight training, a school district, a disability, other, or a payroll expense tax? So there are different types of local taxes. What state is it associated with? What is the tax ID? And again, the ID needs to be something that they can recognize when they're choosing it from a drop-down. The tax name would be who is it remitted to. They cannot fill in the authority or the county. Those are blocked out. How often is it reported? So is it a quarterly reporting or a monthly reporting? Does this tax get included with other taxes? For example, California has, let me show you what those look like. California has ETT and SDI. ETT is a training tax for California, and the payment for this tax goes with the payment for unemployment. So that would be an include with. California SDI goes with the state withholding, and it's a disability tax. So the payments are combined with the state withholding payment and paid together. So you can also see here that we're telling it what's the period. We want this tax to calculate every payroll. So the period is every. We're basing the calculation off the wage base. Before the wage base, they can use federal taxable wages, FICA, Medicare taxable wages, state taxable wages, state taxes instead of taxable wages, hours worked, state unemployment totals or they can do a flat amount. They also can track, like for Indiana, each Indiana county tax has a code. That code number would go here, or if there's a school code, the school code would go here. If it were Pennsylvania, there would be a PSD code that would be associated with it. Then the reason I said go to your agencies first and set up your agencies is because when you're setting up your local tax, you have to select an agency. So if you don't set your agencies up first, then you got to save your tax and go set your agency up and come back and add your agency. Over on the right-hand side, we're telling this tax how we want it to calculate. Is it employee only? Is it employer only? Or is it both? I'm going to cancel this so I can show you the different options. So if I'm saying it's employee only and it's a flat percent, then it's going to give me all of the fields for an employee tax. If I say it's employer only, then it's going to give me all the fields for the employer information. If I say both, it's going to give me the fields for both employee and employer. Now, if this is an incremental tax, what that means is they're going to be tiers. So, and that's going to be based off of the minimum wage and the maximum wage. And they'll, so for, let's say, 0 to 25,000 would be this rate, and from 25,000 to 50,000 would be this rate. So that would be an incremental, and I can show you an example of that in just a moment. Flat means we're going to do a flat percentage. A head tax is we're going to charge a flat amount for each employee, and then a flat dollar amount means we're just going to charge a flat dollar amount for the whole company or for each employee. So with each of those items, you can see that the grid changes. So I'm going to go back and choose a percentage, flat percentage. Now, for a tax to calculate, my minimum wage, if I put in $500 here, the tax is not going to start calculating until the employee has made $500 in wages. So if I want it to start from the beginning, I leave it at 0. If I want it to stop at a specific wage limit, so let's say my wage limit is $10,000. Once it has calculated the wages on $10,000, it won't calculate the tax anymore. So if there is no limit, I can't just leave it blank. I have to put in a max amount. So I'm going to use all 9s. It would be the same with the tax. Is there employee max tax? So if I put in $75 here, once the employee has been calculated $75 worth of taxes, it's not going to calculate that tax anymore. So if there is no limit, again, you would use all 9s. And again, the min wage and the max wage for the employer as well as the tax work the same. If you don't have a minimum, you leave it blank. If there is a minimum, you fill it in. It's not going to start until you actually meet that minimum. And if there's a max, you put in the max amount you want it to cap at. If there is no max, you use all 9s. So you have an employee rate and an employer rate if it's both. But if it's one or the other, then you would choose on the top right, you would choose which one, and then it would only have one of those fields. Typically, you won't use the effective start and end date. In the system, most of the time, start and end dates go when you're going to use, when you're going from something old to something new. But in the calculation of taxes, it won't allow you to do that with the start and end dates. You actually have to go in and update the rates for the current period. If this is a non-resident, meaning that the employee doesn't live there, they calculate the rate, so you could have a resident rate and a non-resident rate, which is typically in areas like Pennsylvania. Let me cancel this. So let me see, I think I have an example. So New York, oh, that's not the right one. I was going to show you an example of a tiered item. Let me log in real quick to my other database, and then that way I can show you what that looks like.
Let me call her and ask about that state. Like if we tell us, what do you want to tell me to do? What do you expect? You know, like she should know if you're the person that's other than herself. Again, even if there's an employee.
Okay. So my taxes are going to take a little bit longer to load because I have Pennsylvania, so I can be able to show you Pennsylvania as well. But on New York, they have a tiered tax. So New York has a local tax for single and married, and the way that it's called an incremental tax. So basically the calculation method is incremental, and it's an employee-based tax. But it's saying that the employee rate is 1.9, the minimum wage is 0, and the maximum wage is $8,000. So if the employee hits this tier, they're going to be charged 1.9% in taxes. So the different tiers based on the employee wages, they're going to hit the different tiers. So if my wages are between $500,000 and $1 million, then I'm going to be charged 4.25%, but I can only pay $19,701 worth of taxes before it stops. So there are limits. So that just gives you an idea of how an incremental tax works.
Okay.
Okay. And we also have, now you'll notice that all the Pennsylvania taxes are in blue. This is part of our Act 32. This is an additional module that the service bureaus have to purchase, and there is a fee associated with that. And then we will give them the instructions to add those in. The way they add those taxes in is they start under global and agencies. And under the agencies over in the far right-hand corner, it says update local agencies taxes and rates for global taxes. And once they do that, it'll add in all of the agencies for Pennsylvania. You can see those listed here. And then it will also add in the taxes and the tax rates for Pennsylvania. Now, we update those twice a year because the agencies update their tables twice a year. I think it's once in January and once in June. So Bill will go out and update the behind-the-scenes table, and then the Service Bureau would go back and select the option under agencies to update the rates. So for a Pennsylvania tax, it's not going to let them edit it. It has all the information filled in. You can see it has the code, the school code and the PSD code, the agency. It's a flat tax. It's employee. It has one rate line for resident and one rate line for non-residents. And it will have the effective start and end dates based on the rates that it pulls in from the agency. Now, also in the global level, you have options under your tax calculation methods. So if you'll notice here that my rates for the tax are not company specific, meaning that all companies pay the same. They don't pay different rates. So I put the rate at the global level. If the rates were company specific, I wouldn't put the rates here at the global level. I would add them into the company setup under the company tax setup. So when we go through the company tax setup, I'll show you how that works and how you add that company specific rate at the company level. They can also say for local taxes that they don't want to impound it or pay it. They're just tracking it on behalf of the client. And if they just want to track a local tax on behalf of the client, they can do so by selecting do not impound or pay. They can also, when setting up the local tax, say whether they want it to be on the W-2 and box 14 or they don't want it to be included in the W-2 at all. So if they don't check the include in box 14, it's going to show in the local section of the W-2. If they say exclude it from the W-2, it's not going to show in the local section of the W-2. And then for some taxes, like Ohio taxes, where did my Ohio go? I scrolled too quick. Ohio taxes actually have tax credits. So if I work in one local jurisdiction and I live in another local jurisdiction, I can get a credit between those so I don't have to pay both of them. So again, if a service bureau is dealing with Ohio's locals, they have to set those up and they have to go to the agency to determine is there a tax credit, employee exemptions, meaning that, so when I'm setting up an employee, I have deductions and I have exemptions and I have dependents. So if I put in exemptions here, like $1,000 exemption, and I put in one at the employee level, then it's going to know that I need $1,000 excluded from the calculation because that's how much I get exempted. Same with the standard deduction. If the tax allows for $500 to come right off the top of the taxable wages, then it would deduct that $500 before it ever does the tax calculation. Okay, so but the information for the local taxes can typically be found on the agency's website. All agencies have an employer handbook, and in the employer handbook it usually gives the tax information and how those taxes can be paid and reported and how they calculate. So that's your taxes. You have your locals and you have your agencies. And again, we maintain all of the federal withholding, all the state withholding. We maintain all the wage-based limits for unemployment so that the Service Bureau doesn't have to worry about doing those.
Okay. Can we stop here?
Sure. You want to call it a day for today?
Yeah, we can. And
okay.
Pick up with workers' comp tomorrow?
Workers' comp at Global. Yep.
All right. Sounds good. I'm going to go back and take some notes. And I was taking